Welcome everyone to another Smart Money training. And in today's training, we're going to focus on the SMCX indicator. We're going to be going through all the components, going into a lot of detail and breaking it down into an even more simplified way of understanding the markets. The more I play around with this indicator, the more we understand these components, the more possibilities we find in the market, the more options we have in the market, the more trades we can find. The whole intention for this is to be able to trade in the most simplified manner possible and to be able to easily find trades, not needing to be a rocket scientist or a brain surgeon to be able to find trades and to get good entries. So this is about simplification and just making it as easy as possible as it can possibly be. So introducing the SMCX indicator, the ultimate trading tool that removes all the guesswork, gives you a clear edge in the market, designed to help traders on all levels. It's a powerful tool, simplify your trading, making it easier to spot profitability setups with minimal risk. So that is the key to this. It's just helping you find profitable trade setups with minimal risk and an easy form to enter those trades. So I'm going to break down the general settings to begin with. So if you zoom in and look at the settings, this is going to be the first settings we get, which are our general settings. And this gives us a setup or framework on the presets or the automated presets. So you'll see over here, first we get the bars back, and this just lets you know how far back you want to see the setups. If it's 1,000 or 2,000, it's going to show you setups very far back in the past. And if you set it to like 100 or 200, it's only going to show you the most recent setups. So if you want to clean your chart and just keep it very relevant, you can lower this number down. Or if you want to be able to observe all the setups in the past, you can increase the number. Then if we come down to the fractal settings, we've got the automated setting. If we've got it set to automatic, it's basically going to work on these automatic presets over here. So if you're on the 1 minute chart, it's going to show you the higher time frame 15-minute candle. If you're on the 3-minute chart, it's going to show you the 30-minute higher time frame candle. If you're on the 5 minute, it's going to show the 1 hour higher time frame candle. If you're on the 15-minute, it's going to operate off the 4-hour higher time frame candle. If you're on the hourly, it's going to operate off the daily. And if you're on the 4-hour, it's going to operate off the weekly. So what this means is it's going to be looking at the higher time frame, and it's going to be creating the setup based on the higher time frame, then projecting it onto the lower time frame chart. So depending on what kind of trader you are, if you're a scalper or a swing trader, or you're looking for even larger swings, you can customize this automated feature to fit your trading style. A lot of people were confused by this, but just simply, if you're on the 1 hour, 1 minute, it's going to be finding setups off a 15-minute chart. If you're on a 3-minute, it's going to be looking for setups on a 30-minute chart. And then if we move to the custom feature, which should be in the drop down over here, it'll come over here and show a custom feature. Then what this custom feature does, you can select a time frame of choice, and it will project that time frame setup onto the chart, and it won't change. As opposed to on the automatic presets, whatever time frame you go onto, it's going to change according to that time frame. If we go into the custom and we set it to 1 day, it will only show you a 1-day setups, no matter what time frame chart you're on. So if we set this to a 1 day and we go to a 5-minute chart, it's still only going to show us the 1-day setup. So this can be a great way if we just want to keep it set to one specific time frame and then go into a lower time frame to look for possibilities within that frame. So these are two different functions, and they both serve different purposes. And we'll definitely go through more examples about on the chart later when I take you on the chart. Then we've got the market bias, and we've got 3 different options. We've got bull and bear. It currently says neutral, but it's changing to bull and bear on the new update. And then it's going to have bullish and bearish. So you can find all the setups, or just the bullish setups, or just the bearish setups. So it's an easy way for you to, if you're only looking for long positions and you don't even want to look for short positions, you can just have it set to bullish, and then it will exclude any bearish setups, which could make the chart look cleaner, and just so your bias being very clear on the kind of trades you're looking to take. So for instance, if you are confirmed that it's an uptrend or it's a very strong bullish token, then you can just set it to bullish, and then it will only look for bullish. So there's no confusion of trying to counter trend trade or anything like that. So then if we come over here onto the higher time frame candles, you can see we've got these higher time frame candles that are projected onto the chart, and we can customize them. We can change the colors of them. We can change how many you want to see. So if you want to see 4, it'll show 4. The current setups and logic is based on monitoring 4, but you can alter it and have 5, 6, 7, 8. You can have as many of these higher time frame candles as you want. So you can see the higher time frame and the lower time frame at the same time. The whole purpose of this is to merge the higher time frame with the lower time frame. So you create this synergistic form of confluence. And this confluence gives us an ability to observe both time frames at the same time and trade them in alignment, because if you can synchronize the lower time frame with the higher time frame, you have a greater success of winning in your trades. Then we've got the space between the candles. If you want a greater space between the candles, you can increase this and it'll move the space further apart. We've got the candle width. So if you want the candles bigger, you can change the candle width and it'll increase the size of the candles. Then over here, we've got the higher time frame fair value gap and the higher time frame open line. So you can see over here, the higher time frame fair value gap, it's just going to show you fair value gaps on the higher time frame candles. You can change the colors of them, and that just gives you a nice way to observe where are the fair value gaps on the higher time frame, because it's a lot easier to see them on the higher time frame than it is on the lower time frames. So you can always keep that in mind. You've got a fair value gap there. Then over here, we've got the higher time frame open line. So what the higher time frame open line is, it's going to draw the opening of that candle on the specific time frame you're on. So for instance, in this example, if we're on a 5-minute lower chart, immediately it's going to show us a 1-hour higher time frame chart on that presets. So if we're on the 1-hour higher time frame chart, it's going to show us the opening, the 1-hour open of the most recent candle. So you can see this was the opening over here. So I will go into a training on candle opens as well, because it's a very good confluence to use, especially the daily open, and it can show you whether the market's going to be bullish or bearish. So for example, in this example, we've got the opened at the top. So when you get an open at the top, and there's a higher probability it's going to be bearish. If you get an open at the bottom, it's a higher probability it's going to be bullish. So we can use these higher time frame candle open lines to observe the direction and movement of the market, and we can use it as a strong confluence. And I will definitely be going into more trainings on how to use that. So if you come over here onto our sweep logic, you can see we've got candle sweep, bullish CISD, bearish CISD, and liquidity lines. So you can see the candle sweeps is going to mark out any forms of sweeps that happen on the higher time frame chart, and then it'll project it onto the lower time frame chart. So all the sweeps are going to happen on the higher time frame first. All the confluences start on the higher time frame, and then it projects it onto the lower time frame, because we want to trade in alignment with the higher time frames to have more confirmation and confidence in our trades. So this will be the higher time frame candle sweep projected onto the lower time frame. We can customize that as well if you want to dotted or thicker lines, or you can change the line color and customize it how you want. And then we get the bearish and bullish CISD, which is usually created after we get a confirmed sweep happening. We get the bearish or bullish CISD that's created. We can alter the colors, the size, the thickness, all of that on the dashboard over here. And then we get the liquidity lines. So the liquidity lines are formed after we get a candle sweep close. So you can see this candle over here that swept the previous candle. As soon as that sweep occurs, it creates the sweep line. But only once this candle closes do the liquidity lines form, because this is just giving us more confidence that if this candle is going to close as a sweep, then it secures the liquidity in the bottom as a potential target. Because oftentimes what will happen is you'll get a sweep line formed, but then price won't close in this position. The candle will actually go up and fail to displace, and then or fail to not displace. And then what will happen is the sweep line will disappear. So this sweep line is conditional based on whether this candle closes underneath. If it does, then it stays. If the candle actually goes above the sweep line, the sweep will disappear, and so will the logic. The logic will change. Then we go over to the higher time frame candle equilibrium. And these are fantastic ways to track your trades and to just see if the market is staying within a bullish or bearish environment. So you can see over here on the chart, candle equilibrium. We mark it on our charts, and what it'll do, it will draw these middle line equilibrium lines on our candles. So every candle will be measured from the top of the candle to the low of the candle, and then it will draw the 50% line in the center. This acts as a very good method to understand, is the market in expansion? Because if the market fails to come back past the 50% line, it's showing it's a high probability that expansion is occurring or displacement. And this is what we're looking to trade with this model. The purpose of this model is to find displacements where you enter into trades, price just drops and displaces, and you end up getting into profits very quickly with very minimal risk. So you can see we've got these 50% equilibrium lines are created. Then if we select the equilibrium boxes, it will project those boxes onto the charts. So the boxes are basically just going to be measuring the 50% line, and then the distance from the 50% to the low, to the low of the candle or the high of the candle. So it's basically just creating a framework or a box where you can look to enter a trade for a continuation. So if price had to come back and retrace into this box, that would be a place to look for a continuation entry. If it's come back into this box, this is where you'd look for a continuation entry. Now, this works extremely well when price is trending and going into displacement. When there's ranging markets, it might not look as pretty, but then you can always wait for a higher time frame breakout before you can look for this model and start entering according to the logic. Then over here, we've got time-based candle highs and candle lows. So what this is doing, this is measuring the higher time frame candles. And what it is doing, so if we come over here, just to show you an example, we've got the higher time frame candles over here. Each candle's got a high and got a low. And depending on what higher time frame it is, what this function will do, this time-based candle high and low, each higher time frame candle, it'll mark out the high of the candle and the low of that candle on the weekly, the daily, the 4-hour, and the 1-hour, which are fantastic confluences in looking for entry points. So based on this training, we're looking for higher time frame levels. We're waiting for price to come to those levels, and then we're looking for sweeps at those levels. So what this will do is it'll actually measure those higher time frame candles, and it will project a line from the top to the bottom and across your chart. Currently now, the weekly and the daily are the only ones working, but the 4-hour, the 1-hour are coming very soon in the next few days with our new additions and enhancements, which are going to even take this indicator to another amazing level. So what this does is it projects these time-based highs and lows onto the chart. You can turn off the highs individually or the lows individually. So if you only want to keep the highs on your chart, you can keep the highs on your chart. If you only want to keep the lows, you can keep the lows. You can change the style, the options. So what we're also getting put in place now, it's not happening right now, but in the next update, we're going to have display options. So it'll be able to show you in the past, so you can see only for the current candle or the past few candles as well. So then you can also end up backtesting using this method. But right now, it's only showing you the most recent previous day high, previous day low, weekly high, and weekly low point, which are key level areas where we have high potential of resting liquidity. So when price comes to these regions, we can look for reversal trades, or if price breaks these regions with strength, we can look for continuation trades. So everything we've been learning in the Smart Money Concepts course, it's just broken down into an easy digest form in this indicator model and an easy method for it just to be projected onto your chart, and without having to draw too many lines, just make it super simple. And then we've got our info table, which basically projects all the data from the chart. So you can see it's going to project the asset over here onto the chart, the asset you're looking at, the model type. So This will show you've got a 5-minute and a 1-hour model. So if you are on the 5-minute time frame, it is going to show this model 5-minute, and then it's going to be looking at the 1-hour higher time frame to extract setups and look for data. If you're on the 1 minute, it'll show 1 minute, 15 minute higher time frame. If you're on the 3-minute, it'll show 3-minute and 30 minutes as the higher time frame model. And then what it's going to do, it's going to have a countdown based on the higher time frame model. So right now, if we're on the hourly chart, it's showing us there's 5 minutes for that hourly candle to close. And this can give us an idea when a sweep occurs, we want to see that higher time frame close for more confirmation in that sweep. So this just gives us a good understanding. Then over here, it'll show your bias, whether it's bearish or bullish and bearish. So it's just a nice little dashboard, just showing you where you are within the indicator, within the model that you currently set up to use. All right, so now I want to go into a little bit more on how it works, just some more details of the logic and examples of how you can use it to get some good trades. So for example, here we've got the beforehand. You can see price has marked out the sweep, or the sweep started on the higher time frame candles. And I didn't put a time frame on here because this could be any one of the time frame presets that we've gone through. So this could be either a 15-minute, a 30-minute, a 1 hour, a 4-hour daily. It's fractal. Remember, this model is a fractal model, so it doesn't matter what time frame you're on. It's going to project the exact same scenarios through time. So whether you're looking for higher time frame, which is going to give you more certainty, bigger moves, to lower time frame, which can be either confirmation to smaller moves. In this example, we've got a sweep occurring. You can see we've got a sweep on the chart. So when the sweep occurs, it will immediately draw the CISD line. And this line is just giving us confirmation of when there's going to be a break in the structure or a change in the state of delivery. So right now, we don't even enter this trade. This is the great thing about this indicator. It's just going to give you markers of specific zones and areas that you will only look to enter when price breaks those levels. So if we go to the after, what we do is we wait for price to break the CISD level. On the break of that level, we can wait for a close and a break. If you want more confirmation, you can also just enter on a break. But if you get a candle close through that level, you can also observe the size of the candle. Was it a big break, a small break? Is price finding resistance? Because you'll find often price will find resistance at the CISD level. So we're just observing to see how is it reacting and responding. If we get a nice break through that level, we can enter the trade. Keep in mind that we do get retracements. Price does retrace back, especially if there was a fair value gap that was left behind, but that's okay. Usually we get little retracements back and then we get this huge displacement that falls. But what we want to do is we always want to wait for the CISD. This line is what's going to keep you safe. It's going to teach you to become a disciplined trader. So you only wait for the break of the CISD line before you enter. And then what happens as we get that higher time frame sweep candle closure, then it projects these liquidity lines onto the chart. It will usually project 2 liquidity lines. Now, these liquidity lines are not formed by swing high or swing low points. They're formed by candle low points or candle high points on the higher time frame model that you're trading. So in this example, if you're trading, if this was a 5-minute lower time frame and this was a 1-hour higher time frame, when you get the price break the CISD and the closure of that candle, it's going to measure the lows of those higher time frame candles and project them onto the chart. Because as you know, price always likes to take out the highs and lows of the previous candle. So that's why having liquidity regions that are at lows and highs of previous higher time frame candles creates a higher probability of success when looking for targets. So it's amazing. Price breaks CISD, immediately the indicator projects the liquidity lines for you, which are targets. So it shows you where to enter, where to exit. It's giving you everything you need. When we set up our stop losses, we put our stop losses above the swing high or the manipulation point. Because this indicator is tracking manipulation and sweeps, then the safest place to put your stop loss is always going to be above the sweep level or the swing high, the break of the previous level, which is our manipulation. And this is the safest place to place your stop loss. So some of the features that this indicator contains, it easily helps you identify market bias, quickly determine the market direction by using these higher time frame candles. If you went through the SMC course, we're going to be looking for continuations or reversals that are going to give us an understand what is happening, but we can see it on the higher time frame candles at the same time as looking at the lower time frame chart now. So it just simplifies and brings everything together in a very clean manner. Safe, low risk entry points. So it helps you find optimal trading opportunities with minimal risk. And it does this super easy. If you've been playing around with this indicator, it makes it very easy to find setups. Really, it's actually mind blowing. So what it does, it's got a fractal nature, combining higher time frame, lower time frame components, which simplify market analysis across multiple time frames. It's got these valid liquidity levels, which helps you spot key target points for profitable trades. It's got these automated equilibriums, which effortlessly helps you track your trades. So we're using equilibrium levels to track our trades to find out how strong is the market. If price is respecting the equilibriums, it's showing us that it is more than likely going into an expansion phase or a trend phase. And this is a very good sign for us to keep holding our trade open. If we can get breaks of these equilibrium lines, it's a sign that price might not be as strong as what we thought it was. And then we've got the CISD magical levels. They know the best entry points without guessing, guys. It shows you the best places to take your entries without guessing, which is an amazing feature that this indicator has. So here's another example. We've got the beforehand. So what we've got here on the higher time frame charts, whether it was a 15-minute, 30-minute, 1 hour, 4 hour, or daily, we get this sweep that was detected. As the sweep was detected, it projects out the CISD line over here. And the CISD line, we wait for that to break before we take an entry. And you can see over here, price breaks that line, nice candle break. We can take the entry. So you can see in this example, price did not retrace. Sometimes price will retrace back to the CISD line. Other times it will just melt straight away and it will take out the liquidity, which is the previous higher time frame candle lows, which are these liquidity areas that are marked. Stop loss is always going to be above the sweep high point because price, oftentimes, if it's a true manipulation, it won't come back and manipulate again unless it's an extremely volatile coin or a highly manipulated coin. And then you can see price comes down and then we get a continuation occur where we get another sweep, which we could have been a continuation entry. So remember, the sweep occurs at the reversal point. If you miss the reversal, you can always catch the continuation. So it's going to give you multiple opportunities to enter these trades, whether you are looking for reversals or continuations. So this whole model is based on this higher time frame sweep detection. It detects it on the higher time frame and then projects it onto the lower time frame chart. And if you've been through our SMC course, this is just showing you where we're going to get reversals occurring because we've got this candle high, which is marked on the previous candle, cannot displace past that level, which is showing weakness in price. And weakness in price is showing us potential area where we're going to get a reversal occur. So that is based on the logic of how the system of this indicator works. So never trade the same way again, guys. And the way I say this, the reason I say this is because it's completely transformed my trading completely. I mean, I've never found it so easy to find so many setups. There's just so many trades to find now. Whereas before you would hunt a little bit harder for your trades and there wasn't as much confirmation. So not only has this been a breakthrough in my own trading, but I'm very sure it's going to be a breakthrough in your trading as well. Because we have this fractal in nature components, which helps you identify market bias, helps with perfect sniper entries, and helps you find those high profit liquidities. Really, it couldn't give you more of what you wanted in the market as a trader. And synchronizing higher time frame with the lower time frame gives you this increased confidence without having to jump into multiple charts at the same time. Everything is just showing you there all at once, all the data you need, everything you need to get into a successful trade. So I'm going to run through a basic rundown of the strategy. It is really simple. There's not too much to this. You'll find that this indicator and this training will make you a good trader trader without having to have studied too much in-depth knowledge. It'll just be refining it now. So based on this complete strategy, we've got this infinity happening between the higher time frame key levels and the lower time frame entries, because it's showing you them all at the same time. It's combining the higher time frame with the lower time frame. So there's this higher time frame and lower time frame synergistic component that's happening to identify these high win rate trade setups, which is what makes this indicator so invaluable. So we've got our higher time frame key levels. And what we're doing is we're looking at key levels based on the weekly, daily, 4-hour, 1 hour, 30-minute. Depending on if you're scalping or looking for bigger trades, the higher time frame key level confluences are going to have more significance, and the higher time frame are going to be more respected. So what we're looking for, we're going to look for these high or low of these higher time frame candles, weekly, daily, 4-hour, 1 hour, high or low levels. When price comes to these regions, these are liquidity areas, and these are potential areas where we're going to look for our long or short positions. We're either looking for swing high or low points, fair value gaps, or the higher time frame sweeps. Everything we've been covering in the course, just simplified through this tool. And then once you've got your higher time frame levels identified and prices reaching either your fair value gap, reaching your liquidity line, your swing high or your swing low points, then we're going to drop onto the lower time frame for our entries. So we're effortlessly aligning our lower time frame with our higher time frame. The lower time frame can be the 15, 5-minute, 3-minute, or 1 minute, depending on what kind of entries you like to take, and if you enjoy more volatile or faster moving entries or slower paced. So for our lower time frame entries, we're going to use the CISD for entries, mark out our stop losses and our targets. That's pretty much all the components. I've simplified this into so much of a reduced way that it'll just make it super easy for you to understand. So here I'm going to break down a few setups, just showing you exactly how all these components work synergistically with the higher time frame and the lower time frame. So you can see over here, this is before the move happened. We've got a higher time frame chart. It's showing you the fair value gaps. Look, it's showing you break of structure. So you can see there was displacement to the upside. Look at this very big candle. Displacement to the upside. Then we get a failure to displace, which forms this higher time frame sweep. The system automatically detects it, projects it onto the lower time frame chart. And now this is going to give us a sign that this could be a potential setup. On the lower time frame chart, we've also got price hitting a weekly high. So this yellow line is the weekly high or the previous week high line. Price is hitting the previous week high. We're also getting a higher time frame sweep. So that's adding a double layer of confluence. So the first component was price hitting a weekly high point or liquidity area. The second was a sweep occurring in that area. So price hits that area, we get a sweep occurring in that area, this lower time frame sweep. Immediately, the CISD line is produced over here. And then all we have to do from now is just wait for the CISD line to be broken. If you want more confirmation, you can wait for this higher time frame candle to close, and that is a stronger confirmation. But I have noticed sometimes that once you wait for it to close, you've actually missed the move or missed a large portion of the move, which means you won't catch the true reversal, but then you can always catch a continuation. But the way the logic of this indicator is created, it shows you all these entry points before the higher time frame candle closes, specifically so you can get an early entry into that trade. So from this point now, all we would do is we'd wait for the CISD line to be broken over here. And you can see in this example was broken with a nice candle, which would have been a stronger confirmation that there was in fact good downward pressure on this trade. So now I've just broken down more of the components for you. You can see all we needed to wait for the CISD to break. We could have entered that position. We would have targeted all this lower level liquidity. So the liquidity lines are potential targets, and it is a very strong likelihood that price likes to go to take out that liquidity. So you would immediately target this liquidity. You can see in this example, there was a bunch of liquidity that was showing there, and you could have targeted any of that liquidity, whether you wanted to take the top line or the lower line, depending on what kind of movement you're looking to target in the market. Some people just want their 2% and they're happy. Otherwise, you can target your 4 or 5%. It's totally up to you. We place stop losses above the swing high point. So you can see this was our manipulation zone. We place a stop loss above there, which gives you extra protection. If a stop loss is above a manipulation point, price has the least likely to come manipulate there again. Enter at the break of the CISD line, targeting the low liquidity. Everything is projected on the chart for you, so it makes it super, super easy. As soon as price breaks the equilibrium, or I mean break the CISD, and we get this candle closure of this higher time frame, then we get the EQ levels that are created. So you can see once we get a sweep occur, and then we get the candle closure of the candle that caused the sweep, what it'll do is the logic will draw the 50% line through that candle, was measure the candle, draw 50% equilibrium, and then we'll project that equilibrium onto the chart, and then price will respect this equilibrium box. If price does respect that equilibrium, there's a high probability that there's going to be continuation and the price is going to continue to melt to the downside. So this is a fantastic way to track your trades and to see what is happening within this higher time frame and within the lower time frame at the same time, which just makes it so, so easy to trade. So the key is aligning the higher time frame with the lower time frame in this way, which will give you a massive edge. This is what we call fractal trading, and it's really going to change your trading in a massive way. I'm 100% certain of this. So here's another example. Here's a long position to look for, and this is beforehand. So you can see over here, price has been going to the downside. We got a sweep. This is a higher time frame candle sweep to the downside. We get the sweep line, which has created this failure to displace candle. It also forms a reversal candle. So if you ever wondered why reversal candles are these hammers, or inverted hammers as we call them, this is the reason why, because they fail to displace past the previous low or the previous high point, which is just showing there's resistance. Usually there's these big wicks as well. When you see a big wick like this, there's a higher chance of reversal because it's just showing all these orders are being triggered, which is usually what's happening when stop loss orders are being taken. It's triggering all these positions and people are entering trades or stop losses are being taken out. So immediately it projects that sweep onto the lower time frame. You can see it projects the line here. As that line is projected, it marks out the CISD line. And if you know, the CISD line is the candle or series of candles that caused the manipulation. So if you look at this candle that caused the sweep, look at that. Look at the aggression. It's usually a very aggressive candle that causes a sweep. There's an aggressive move to the downside, and it's usually the candle or series of candles that cause that move that we mark out the CISD. The CISD is also an order block. It's also known as an order block, and it's also known as a market structure shift. There's many different terminologies, but in this context, it is a fantastic way to determine when there's going to be a change from a bullish to bearish scenario in the charts. And that is why we wait for price to break this level to confirm that this is in fact a true reversal that is taking place, or we wait for the higher time frame candle to close so that we can get a swing low that is formed. Because swing lows is when you get the lowest low, and then there's a lower high to the left and a lower high to the right. So in this scenario, it gives us more confidence in what we're doing. If you look at the chart here, we've got a 4-hour low. So this is a 4-hour swing low that's being projected. Price is tapping into this 4-hour level. We're also getting a sweep at that level. So in this scenario, we're combining a higher time frame key level with this higher time frame sweep, which is just going to give us more confidence. And then you can see now we have the scenario perfectly aligned. All we're going to wait to do now is wait for this CISD level to get broken. Once price breaks the CISD, that is going to be a very strong sign for us to enter this long position. So you can see now that we've seen the process that's occurred, you can see over here, price breaks the CIS level, and look, it breaks it with a lot of strength. So this gives you a sign. If you see a candle breaking the CISD with a lot of strength, that is going to give you a stronger sign that this is in fact a true reversal that is happening and a true state of change of delivery. So you can see price breaks that level. We can enter on this candle break, or we can wait for a retracement Oftentimes, there will be a retracement back to the CISD level or close enough to it, and then we'll get the formation of these higher time frame equilibrium lines that will form. You'll see the higher time frame levels are projected on the higher time frame chart, and then the boxes are projected on the lower time frame. So we can stay in alignment with these levels. So you can see over here, this equilibrium box that was formed, price was not able to close below it. You can see we just got wick rejections below it. So look, it's showing you how price is respecting these 50% levels. And if price is able to hold that level, is a strong indication that it will keep continuing in the intended direction. So you can see price hit a higher time frame liquidity line, 4-hour. We got a sweep occurring at that level. Then we got the CISD line projected. When price broke the CISD, that would be our entry point. Our target would be our liquidity lines or our higher time frame candle highs. And you can see in this example, this candle over here that I'm going over, the high point of that candle would be the first take profit area, which would be the projection of this liquidity line. The second would be this candle over here, but at the formation of the CISD that was not present. So all it does is it reaches back in time and finds the most relevant place where liquidity is resting and potential area for your targets. So all of this is happening without you having to do anything. It's really showing you everything. The biggest component in finding success with this indicator is learning to understand the direction on the higher time frame. Because if you're on a higher time frame daily or 4-hour chart, and you can see we've got break and structures to the upside or continuation to the upside, then you only want to look for long positions within the logic on the lower time frame. You can, however, do a true reversal trade when price is hitting a higher time frame level. But the key to this, we've given so much of the automation to make this as simple as possible. But the key to your success is really going to be in understanding how to use the higher time frame with the lower time frame so that you can find trades that are in alignment with the higher time frame. So here's an example of how the logic is working. We've got a swing low or a daily low or a key level that's marked out, a higher time frame key level. Price hits a higher time frame key level, and then we get a sweep occurring exactly in that location, the failure to displace, which is letting us know is a reversal. So we're working with these two candle pair logics, which is occurring at a higher time frame key level, whether that's a fair value gap, whether it's a swing low, a swing high, or whether it's going to be a higher time frame candle high or candle low. Once we're combining all of these details together, it shows us a very valid or high probability setup where price loves to respect when we can tie all these components together. So breaking down that example, you can see prices come down. It's hitting a swing low or a daily low, which is our key level. So then we're just observing, is there a sweep occurring in that level? Yes, a sweep did occur in that level, which is our failure to displace. We can either wait for that candle closure, or we can mark out the CISD and wait for the CISD to get broken. So zooming in a little bit more now. So this is the process. Price is hitting that key level, which is marked out over here, hits the key level. We get a sweep occurring at the same time, the same place, and we mark out the CISD, and we're just waiting for the CISD to be broken. Our targets are going to be the previous candle highs on the higher time frame. In this scenario, we had 3 very relevant candle highs, which we marked as our targets. You can take all your profits at the first target, take partials, or wait for price to hit all your targets. This will be completely up to your trading style and your risk tolerance. Some people just want to get out of the market with 2 or 3% and then wait for the next trade. Other people want to actually capitalize and maximize the profits on their trades. However, the longer you hold your trade for, the more risk that is incurred, especially in the crypto market, as we can see so much manipulation going on. So I found that being humble and just taking a few percent and waiting for another trade often can lead to more success than waiting for a massive win. But it all just depends on your risk tolerance and your style of trading. So here's another breakdown of how it works. You can see higher time frame logic finds that sweep, detects that sweep, marks out that sweep, projects it onto the lower time frame, and then it marks out our CISD level. Price breaks the CISD level, that becomes our entry. We often get a retracement back to the CISD because remember, CISD levels are also order blocks. They are also order blocks. So you can use them in both ways, but I'm just using it to simplify trading because I'm just finding that there's so many different ways to explain the same things. And my focus is to simplify it as much as possible, make it as easy for you to digest, comprehend, and to execute on your trades. And then you can see price breaks the CISD level, takes out, hits liquidity 1. At this point, there was no more liquidity because we had reached all-time high with this chart. In that scenario, you're not going to be able to find projected targets, and you'll just have to take targets whenever you get swing highs that get broken. You can see over here, we get the equilibrium lines that are projected onto the chart. They get projected into these equilibrium boxes. Price respects these boxes, respects these boxes. So that's a strong sign that you can keep holding your position. If price breaks these equilibrium levels, that could be a sign now to exit your trade and take your profits because there's a weakness in the markets. So if we zoom in, adding more details, it's just showing you exactly how it's putting everything together. So SMCX is projecting all these components onto your chart, all these relevant components, everything you really need to know and to be able to observe. The only thing left now, it's just your judgments on the higher time frame and understanding how to read the higher time frame in accordance with the lower time frame. And that will lead you to a lot of success in your trades. All right, so now that I've broken down the components, giving you a very good understanding of how the indicator is actually working, I'm going to take you onto the chart and show you some potential breakdowns of trades that I took yesterday. And I'll just show you how easy it is to go into the chart and to immediately find good setups. So if we come onto the chart over here, I'm going to just add all the components, higher time frame line. So the higher time frame line is going to be something I will go into in later tradings just to show you how to use it. There's very specific strategies how to use it, but it all just plays the part with how the system works. So you can see we've got candle highs over here. So let me just quickly show you a few things. So right now I've got set to 500. I've got it on automatic. You can see I'm on the hourly chart. So you can see I'm on the hourly chart and it's on the daily model. So the higher time frame right now is the daily, but I'm actually on the hourly chart projecting both at the same time. Right now it's set to only bullish setups, but I'm going to add bullish and bearish. So now it's going to look for both setups. So I'll give you an example. Over here, we've got the higher time frame candles. I just wanted to show you if I add more candles, you can see, look how it adds more candles. And this is a great way to see the strength of the market because you can see, look at all these green candles, look at all these breaks and structures to the upside, look at the continuation to the upside. This is showing us that this is a very strong token. So we probably want to be only looking for long positions here unless price is going to reach a critical high point. But this token has hit all-time highs. You know, if we go into a daily chart, you can see it's pretty much hit all-time highs on the exchange that I'm trading. So now it's harder to tell, but there's going to be a big reversal that is going to come at some point. I mean, it could even be happening right now. So if you see right now on the chart, if we look how easy it is to find a setup. I mean, I literally just put this on the chart and we already have a setup in place. We've got a sweep occurring over here on our higher time frame. This is our daily chart. So remember, when we're on a daily higher time frame chart, this is going to show stronger confluence and there's going to be higher probability of catching bigger trades. So then if we jump onto the lower time frame, you can see immediately we've got the CISD level projected onto the chart. Sometimes the CISD level in this scenario, it's actually not in the right position. It should be a little bit lower down, but there was so much manipulation on this token. You can see we've got this massive wick to the upside and this wick to the outside, which obviously confused the algorithm of the trade of the indicator. But that is why it's also good for you guys to go through the trading and the training, because you will know exactly where the CISD lines will be positioned. We're currently working on a big upgrade to this indicator at the moment, which is going to create more of an intuitive nature to the sweep levels and the CISD levels, and it's going to create a lot of improvement, especially situations like this where you get massive manipulation. I mean, look at that. Look at this Darth Vader candle. Wicks out the top, wicks out the bottom, obviously threw off the algorithm. But in this situation, we're going to get a break of the CISD level. That can be our potential trade. So this indicator, even though it's so amazing and it's showing you everything you need, it's also good to understand the methodology behind it. Once you understand the methodology behind it, it's also going to give you a massive upper hand in being able to trade it. That's why I've created a super in-depth smart money course, which is based on all of these components. And I strongly recommend you to go through that course once, or at least once or two times, to familiarize yourself with how the actual methodology of the system works, so that when you actually use the indicator, it's just a helpful tool, and just it'll bring everything together for you, and it'll also help train you on how to mark out these levels. But that's how easy it is. So right now we're on the daily, and you can see we've got a daily sweep occurring. So this could be a massive reversal that could be in play. We can wait for this daily closure. If this candle closes underneath the previous high in this position, then we have a very good chance that there's going to be a lot of reversal trades. I mean, look, it's done 276% since this low point, well, the weekly low, which is massive. It's actually ridiculously massive. So there can be some very good trades. This is a very volatile token, and it's been a very great token to trade. I actually got some great trades last night. I will show you. So whether you're doing higher time frame trading or lower time frame, it's totally up to you. I'm just going to bring this back to 4, so you can see. So you can move this back to 4 if you just want to see less. If I want more space between the candles, I can increase this, and you'll see it will increase the space between the candles, depending on how you like to position things. If I want to increase the size of the candle, I can increase the size of the candle over here. So that's just nice ways to customize it according to how you like. You can see this is our fair value gaps, which project the fair value gaps onto the higher time frame candles. Here's the higher time frame open line. So you'll see if we go into the open line, I want to show you now. The daily open is probably the most important open line that you need to focus on. In the new upgrade that's coming, we're going to focus on multiple open lines on 15 minutes and 1 hour, which is going to help us track order flow. So we've got 1 or 2 components that are coming soon, which are really just going to add even a stronger edge. I mean, this indicator is amazing as it is, but a few little tweaks to it, and guys, you'll never need anything else. If you understand this methodology and have this tool, then everything else is just an extra confluence. Like if you use Trend X with it, it'll be an extra confluence. If you're using Indicator X with it, it'll be an extra confluence. And I'm going to be doing trainings on how to combine this with Trend X, how to combine this with Indicator X, because it's just such a fantastic tool for entries. And if we can use our other tools, which are good for understanding bias and trend conditions, like for instance, using Scanner X to find narrow pivot tokens. When we combine this with that, it's just going to give us an unparalleled edge, honestly. But if you look over here, we've got the higher time frame open line that's projected, this line over here. And what it's doing, it's projecting the open of the current candle. So you can see over here, this is the low of the current candle. This is the open of the current candle over here. So if you watch my training on the open, on basically every candle's got a low, a high, and an open and a close. So the key is, once the rejection happens, you want to trade the body. You want to trade the body. So in this example, you can see price displaced down to the downside, but then recovered that, and there was a failure to displace. And that is the only reason why we got this upward movement, because the open is at the bottom of the candle. If the open was at the top of the candle, we'd be looking for a short position. So just observing where the open is positioned on the higher time frame candles can give you an indication of the direction of the bias for that day. I will go into more specific trainings on how to use this, but right now I'm just breaking it all down. Then we've got over here the fair value gap. You can see fair value gap that's created. We can create different colors, increase intensity. We've got higher time frame open line, just went through, and then we've got all of these details, which are pretty straightforward. The sweep marks out the sweep on the higher time frame, the lower time frame, the bullish CISD, bearish CISD line, candle equilibrium. So if you want to take away the candle equilibriums, just the lines off the chart, it'll take the lines off the chart. If you want to take just the boxes off and keep the lines, so if you want to keep it clean, and then it'll just show the lines on your chart, maybe you want them a bit thicker, so you can do that. So now it's quite easy to see. These are equilibrium levels, keeping in alignment with these. You can really customize this however it makes it easier for you to interpret the data. We give you a system that just makes it easy to interpret data. That's what this indicator does, just helps you interpret the data we're giving you. And then based on that data you're receiving, it can help you make better trading decisions. But essentially, if you understand the methodology, you can do this without having the tool. The tool just really just makes it so much easier. Then over here, we've got the candle high and lows. And as you can see, we've got the weekly down here. So this is the weekly low, the previous week low. And then this is the previous week high. You can see over here. So right now, this daily high and this weekly high are actually overlapping each other. If I take the weekly off, you'll see now we've got the daily high. Right now, the daily high, the weekly high, and the sweep level are all happening at the same place. So this is a very strong area of confluence. If I go into a lower time frame, so let's look on a 3-minute. 3-minute time frame. I actually entered this trade before the session. This was where I was. I'm actually in this trade right now. So you can see over here, this is where I was. And it was very easy, guys. I literally just literally looked at the chart for a second before I did the training and I spotted this. Look at this. So if you've played with this or know the methodology, you can see we've got a sweep occurring. We've got CISD. This is a very low time frame that's happening. So this would just be a smaller move that you would take, or you would just track it and it potentially could turn into a bigger move, provided it breaks a low. So you can see here, this yellow line is a weekly high and a daily high. So once price broke this CISD, so this is where I entered, I wait for price to break CISD. There we go. Price broke CISD and I took my entry. And then if price broke the daily and weekly high, that would be even a stronger confirmation now because it broke above this key level. If it breaks below it, it's showing that it's breaking back into the weekly and daily range. So that just became an extra component. So we went forward. You can see over here, we got the 50% level that's being produced. Let me just turn on these equilibrium boxes. So you can see oftentimes when price breaks this equilibrium, or sorry, the CISD level, it will retrace back to it and it'll come. So we want to make sure it stays within this equilibrium because over here, if we look at our higher time frame candles, we got the sweep that occurred. And then when we got a closure of this candle, so the candle that caused the sweep, when it closes, that is precisely where we get the equilibrium level that's formed. So then we just want to make sure that this higher time frame candle stays underneath this equilibrium. So you can see it wants to stay underneath that equilibrium, and that will just be able to track this position and ensure that it is moving in the intended direction. So let's see what happens next. So you can see price came up, it rejected that 50% level. Look at that perfect rejection to the level, which is also a strong sign. Came down, and then we got a break of this actual level down here. So here's another example I wanted to show you. So you can see we've got actually a bullish CISD that's produced over here because we got a bullish sweep. So because it's tracking bullish and bearish setups at the same time, it's going to also find bearish and bullish trades. You can see here, because we got this sweep low occur, that's when it formed this bullish trade. So it marked a bullish CISD. If price had broken above this blue line, that would have invalidated our short position and we could have actually entered a long position. So the way this is working, because it's tracking bullish and bearish trades, it's also helping you find invalidation points. So because we got the bearish CISD produced over here, and then over here we had a bullish CISD produced. This bullish CISD would be the invalidation. So if price broke above here, it would invalidate our bearish trade and we could actually switch and enter a long position. But in this situation, it did not do that. So we could hold our trade. It's also respecting the equilibrium boxes. If you look over here, this is box number 1 that's being respected, box number 2, and box number 3 that's being respected. So we continue to hold our trade. In this scenario, where would we take our profits? Our profit areas are produced on the chart. You can see the liquidity lows are produced there. So these would be areas we would look to take profit. You can see where's price now. So let's see where this goes. I'm still holding this trade. We've got a break to the downside. You can see we've also got, okay, this is our 30-minute high time frame because we're on the 3-minute chart. So it's a very small scalp that you'll end up taking, but it just showed a very easy method to enter the trade. And once again, what did we get here? We got another bullish scenario that was detected over here. So here's another bullish CISD, which can become an invalidation point. If price breaks above this bullish CISD, this could invalidate our position. I'm just going to turn off this higher time frame line. So the higher time frame lines, they work on whatever higher time frame you're showing. If this is a higher time frame, if this is a 30-minute, it's going to show you the 30-minute open line. If it's a daily, it's going to show you the daily. So it's going to adjust and change to whatever higher time frame you're showing. I just forgot to mention that. So you can see in this scenario, we're looking good in this trade. I'm up in this position, and it was super easy to find, but it's just showing you how simple and easy this is to use. Here's another example of a trade earlier on, which is very straightforward. This system and this tool makes it very straightforward for you guys, like extremely straightforward. If you look over here, I mean, this would have taken you a few seconds to figure out. Price is hitting a higher time frame liquidity over here. If we just look to the left, you can see we've also got a region over here, which is a lower time frame area, candle lows or higher time frame lows over here. So price is hitting these lows, and then we get a sweep that's created over there, a sweep. So this would be a very good possibility to start looking for a long position. You can see CISD was produced over there. So all we'd wait to see is for the CISD to get broken over here. Price breaks CISD. We can enter on the break or the retracement. There was not much retracement, and then price came up and it tapped into our target, which was over here. So that was a very easy one to find. I mean, here's another one. There's so many of them. And if you want to become very specific, just pick bearish ones, for example. If you can see that the higher time frame is bearish, just look for bearish. In this example, it's bullish, so we'd mainly only look for bullish scenarios. But with this tool, it makes counter trend trading super simple as well. Like you can see in this example, we got a sweep over here. We got a sweep occur right there. We got the CISD that was broken over here. This could have been a small trade we could have entered, and this break. I mean, it would have been a small trade, but still 1 or 2%, which is fantastic. So it all just depends on what kind of trader you are. Remember, we are on the 3-minute and 30-minute model. So we are looking for smaller trades on this model. But I just wanted to show you how many possibilities it shows. So here's another example. You can see we got a nice sweep occur over here. Nice sweep occur. We got the CISD line produced over here. CISD line. And all we do is wait for price to break CISD. Price breaks it, retraces. Also notice our equilibrium box. Price is retracing into that box. It did not go higher. And then we target the lower liquidity lines, which would be over here. See, these would all be targets. Because price, remember, price is always traveling from liquidity to liquidity. So in this way, when we get these liquidity lines being produced, and remember, these are not just arbitrary liquidity lines that are being produced. They're being produced according to a very specific logic of these candle lows in relationship to the CISD and the sweep level. So they become very valid. You can see price took out liquidity, and eventually took out all of this liquidity. You can see all of this liquidity was taken out. At this point, could have been a position to look for a long position. So let's see now if I turn on the rest of the logic. So now I'm going to turn on bullish to see if there was potential. So there you go. So I'll turn on both actually, just so you can see the previous liquidity lines that were taken out and how we could have got into a fantastic setup. So here we go. You can see all of these lows are being taken out. Look at that. All this liquidity is being taken out. And then what do we get? We get manipulation occur. We get a swing happening. That is a strong sign for us. That price came down, took out this liquidity. Now it's going to reverse to take out the higher liquidity. So we get a sweep occurring here. We get a CISD level produced over here. When price breaks that CISD level, we can look for an entry. In this example, you can see our CISD level should have been actually up here. Sometimes the the logic gets confused if we get manipulation happening, and this is why we're working on a more intuitive logic for the upgrade. But this would have been the actual bullish CISD, and you can see price broke above it and would have been a nice entry. But even though it's not 100% yet, it's still 95% there, and it's enough to help you find lots of good trades. Just notice how price is respecting the equilibrium boxes. Look, respecting the equilibrium box, respecting equilibrium box. And then it takes you all the way to our target, which was over here. Probably if you go into a 1 minute, you'd find a target. So if you don't see a relevant target on the time frame you're on, just drop to a lower time frame and you will see, there you go. You can see now all of a sudden we've got a lower time frame liquidity level. Remember, this tool, this methodology is fractal in nature. So you can jump from one time frame to another time frame. You can zoom up, you can zoom down. But right now, if we just look at where this is within the framework, you can see prices finding a massive sweep, a 1 hour sweep, or a daily sweep. So we could get a very big reversal here. So if we're interested, we could go into lower time frames and we could look for bearish setups. As long as price is respecting these equilibrium levels, you should be good. But anyways, I've spoken for a long time now. I would love to hear what you guys have to say. If any of you guys have tested this out yet, please, I would love to know your experiences and what you've experienced with it so far. And if you have any questions, please let me know. I would love to hear them. I think you guys can unmute yourselves. Okay, yeah, you can unmute yourselves.
Hey, Steph, that's Tobias. Hello? Hello? Can you hear me?
I can't hear.
No.
Yeah, I can hear you, Tobias.
I see he can't hear it, right?
Oh, I can hear you now.
Ah, that's...
How are you, my friend?
I'm good. It's ridiculous. It's ridiculous. I have to say something because we do both the same coin, right? I
Yes.
just spoke today and I had the same entries. I'm out of this short now. I have 50%. I'm good.
Oh, fantastic.
Somebody else asked me at the weekend, you know, how I do get in 1 or 3 minutes. And I think the most important is I always look on the left side, you know, like a bit more on the left side if there's a nice swing.
Yes.
And then it gives me more confidence just to get in and say, there's a indicator. And what I realized is that we learned it without indicator, because I know how it was when you learned about indicator X.
Yes.
You see the indicator and then you have so much question. You don't understand it. You're thinking, why it's this? And now it was the way around, actually.
Yes.
And this makes much more sense now. It's like ridiculous how much this indicator helps now on top of this.
Yes, exactly. Because you know the methodology, now it's just giving you like X-ray goggles with the methodology that you understand.
I mean, what was very nice for me today was this equilibrium.
Equilibrium.
My German, man, I tell you. So this was a nice new hint, you know, that it goes very often back to retest it, actually. And I can see it already now, right now in the trade. It was retesting again one, and it goes just straight down to the TP, actually, to the first one.
Can you show us the trade that you took?
Well, yeah, of course.
I'd love to see, and I'm sure everyone would love to see as well.
You have to share, Seth.
Okay, yeah, there you go. You can share now.
Okay, I'm on another screen, but you should see it now, right?
Yes, yeah, we see your screen.
So this was the trade now, which you also took, right? I mean,
yeah, I took it as well. You actually told me to look at the chart, and then I looked and I was like,
and I added here a bit, actually.
Oh, great.
So I was like, if I would know this with this box, it would give me more confidence that I get not stopped out.
Yes. And you can see a perfect rejection into the box.
Yes, here. I saw it. And now I see it because you said it. And I'm just out, you know, my aim is with this coin, it's ridiculous. I mean, if I would put in more money, I would have made a ton of money this weekend. But I made altogether $40. So it's okay.
A win's a win.
But it's really good. Also, what I want to say is, for example, here, I mean, you see on the 3 minute, but nothing on the 5 minute, right?
Yeah,
Um,
exactly.
but when you know this, for example, this liquidations here, they give me confidence that this could be a valid one.
Yes, exactly.
Because this is a nice swing here,
Yeah.
and this looks very good for a change, and it works just very good, this indicator. It's ridiculous.
Yeah, it's awesome, man. Nice.
Yes,
So
yes.
nice. Yeah, it makes it so easy to find them. You can just open a chart and immediately you can spot a
Yes.
trade.
Why I added it was because here you see this is the CISD, the white one here, and it
Yes.
also retested the CISD actually. And then I was like, okay, I add a bit more. I add
Nice.
$1 more.
That's perfect. You know, once you're winning, you know, even if you're playing very small positions, if you are consistently winning with small amounts, that just builds confidence. And then
Yes.
as your confidence builds, then you start increasing your position slowly, but slowly.
Absolutely.
And so you're winning, like, even if you're winning 60 or 70% of the time, it's a very high win rate.
Yes. I
So
mean, Seth, the only thing what always confused me with is this high stop losses. Well, because I think, okay, if I make now 5 and 5 and I have a stop loss with 10
I
and it
know.
hits it, then 2 trades are gone. But what I realized, I would say I made 10 trades and I lost just 2.
Oh, amazing.
So
Wow.
if you take the real sweeps, you know, like you have these sweeps on the 1 hour and 4 hour, it goes really very, very rarely back and stops you out. Very rare, I would say.
Yeah, it's very rare. If it's a true manipulation, it is very rare. And it does seem risky because it's such a big stop loss, but it is the safest place to put it.
Yes. I mean, you see, I was thinking to put it here over this swing. I would get stopped out.
Yeah. And that's where a lot of people would have put it because it's a smaller stop loss.
Right.
But I mean, yeah, some setups will be better in terms of the stop losses being low, but some might not. We just have to go with what the market presents to us.
Yes, and on the day, on the 30 minutes, there's a nice bearish dip again. So it looks actually good that this maybe goes even deeper.
Yes, I'm still in the trade. I'm going to hold it.
I see. No, I'm fine. I'm fine with 50%. I'm good for now. I really learned to be very humble and take 40, 50%. This is amazing. I mean,
it's amazing.
But really, this coin, you have to say it's very special because it's so volatile. It's ridiculous, really. I mean, I'm trading now since a longer time this strategy, and normally you have to wait a day or 2 for this.
Yeah.
And now it's in an hour, half an hour.
It's nice when it moves so fast because there's just so many opportunities, so many entries.
Yes. So thank you very much. I have to go to work. It's amazing indicator, really. It adds a lot of confidence to the strategy, I would say.
Oh man, I'm so happy. Thanks for sharing. Really appreciate that.
Okay, cool, man. Have a nice day. And
yeah, have a great day. Cheers,
eh? Bye.
Hi, Seth.
Hello, Titch. How you doing?
Hi, I'm good. I have a couple of questions.
Yes.
Over the weekend, I sent you a message on Orca saying that I wasn't able to see some of the markings on the chart. It seemed like it was lagging.
Okay.
And then you said refresh it and do whatever. Can you just open up Griffin?
Yes,
I think Griffin is right now, maybe.
Let's have a look.
I'm not sure, maybe my settings.
Griffin, I haven't seen this one yet. And it's on BitGets, right?
Yeah.
Let's see. Oh, there we go. Is it graphene like that?
Yes, graphene, yeah.
Okay, perfect.
Okay. Now.
What time frame are you looking at?
5 minute, 1 hour, that kind of.
Okay. So right now you can see it's just kind of consolidating. You can see we've got the daily low, the daily high, and it's just kind of consolidating in this like box over here.
Right. So it's not marking out too much. It's just thinking what it wants to do.
Yeah, there's nothing happening just yet. So what it's done here, you can see there's a break to the upside. So it is showing continuation to the upside on the hourly chart, but there's no confirmations of anything yet. Let's go on to, you see what I would wait for it to do is break out of this box. It's forming a consolidation now. So as soon as it breaks out of this consolidation, you should see some movement that'll happen. Otherwise, you can wait for price to come to a daily high and look for an entry, or if it comes down to the daily or weekly low, could be a great place to look for entries. So these could be good places, but right now it's just kind of consolidating. It's not much happening within this chart, and it could just be because it's a Monday, because usually this is what happens on Mondays. There's this consolidation that happens. But if you just keep tracking it, I'm sure you'll see something happen. So what you'll see is either a sweep it'll take out this high or take out this low, and then a sweep will be produced on here. But in the upgrade now, we're getting these alerts, so sweep alerts and CISD alerts. So it'll alert you when CISD is broken and sweeps occur. So we could just put alerts on and then just wait for alerts to go off, and that'll be a strong confluence.
Then something else that I have confusion with is the bullish and bearish boxes.
Yes.
Very often when we're looking at a chart, it looks like there's a bearish box formed, but actually the token's going down.
I'll show you actually why that happens right now.
Okay.
Let me find here's an example. Okay, so you can see here we got on this higher time frame candle, we got this break to the upside, and then it formed a sweep. So you can see we've actually got a bearish setup, but the price actually went up. So what it's doing is it's identifying, okay, wait, maybe I'll find a better example of it.
Maybe ALCH.
Which one?
ALCH.
ALCH. Let's see.
I think that's a better token.
Here we go. Let me get the Bybit one or the Binance one. No, it's not finding it.
It can be Binance. I trade both.
Okay, you do Binance as well. Okay.
Yeah.
ALCH. Okay, wait, here's Bybit. It's fine. Just for the example to show. Okay, there's crazy manipulation happening here. Let's try find. Well, what I'll do is I'll go back in time and then I'll just play it. So yeah, so it'll show an example. Hopefully it'll show an example. Oh, this is busy chart. So yeah, so you can see what the logic is doing. Let me try find. There we go. So here, so you can see over here, this is the perfect example. So price is broken below it. Can you see? So this was the sweep low. It broke below and then it created the sweep. So now it's created a bullish setup, even though it's a bearish scenario.
Right.
You see, so the reason the logic is doing this is because I could have had two options. I could have waited for a candle close, because right now it's broken below and it's showing, this line is showing that it's a break of the previous low. But now if we keep going, what will happen is it will disappear. You see, that setup will disappear if it doesn't close in that same position. So let me draw it over here to make it clearer. So say, for instance, we get these candles. Say, for instance, this candle breaks above this wick over here. So what it will do, it'll create a sweep, because what the system is doing, it's detecting any candle that breaks above the previous high. It creates a sweep. What would usually happen is, if I had to wait for a confirmation, it would only confirm it if this closed underneath that level. You see? So now it would confirm it if I set the logic to confirm only after the candle closed. But what it's doing right now, it's waiting until to see what happens. If this candle closes above here, so this will still create, it'll still create the sweep now, but if it closes above here, on the closure, that will disappear. So the reason it's doing this is because it's actually showing you a setup early. So in case it does close in the right position, you can actually get into an earlier position. But we're working on some changes now that are gonna do this. So we'll have the logic here. So if this is below, it will show. As soon as it comes above, it will disappear. So it's a bit more of an intuitive logic, but right now it's not at that place just yet. So right now it's going to show you all any breaks to the up or downside. So you can see right now, here's a perfect example. So you can see on the higher time frame candle, we've got this candle that's broken above this high and it's produced a sweep. So it's actually showing us a bearish setup, but it's looking at a very bullish scenario. So, but what it's doing is it's also letting us know this is an invalidation point. So we know if price comes below here, it invalidates the trade. If this candle closes above the sweep level, this whole setup will disappear. So you'll see here. There you go. Can you see? So now that disappears. So what keeps it there, what validates it, if it closes, if it fails to displace with closure, then it will keep the setup there. If it doesn't, then it will disappear. So it's almost like it's just a possibility that it could happen until the candle closure, and then it's not a possibility anymore once the candle closes. So it is showing you something a little bit earlier, but the reason I created the logic like that, so it can help you get into a good trade earlier. Otherwise, sometimes if you have to wait for a candle close, it can be a little bit too late.
Yeah, true. And Seth, what are the red and green dots that appear?
Oh, the red and green dots. So what will happen is the red dots will appear on a sweep, on a confirmed bearish sweep, a red dot, and a bullish sweep. I've actually turned them off now, but I'll turn them on here so you can see.
Where do you switch them off?
You can come over here if you go into style and then you come to pane labels, you can turn them off.
Okay.
So what they do is they'll show you, when there's a confirmed bullish setup, it confirms the dot. It's another
but
setup.
They move as the trade is continuing. Like I thought that if I set an alarm on the green dot itself on a trade to see where that price is going to go to.
You
but it can be confusing.
Yeah, it all depends on the closure. See, so the dot is formed, but then if the candle closes in that position, it stays. If it doesn't, it disappears. So when it pops up first, it's showing you potential. So like it'll pop up, show you potential, but only when there's a closure of that higher time frame candle will it stay for good. So it could be a bit confusing, but that's why there's a few more little nuances to understand the system, but you can turn them off. It's basically whenever you get a sweep, it forms a dot.
Okay. And sometimes I find it confusing. The liquidity levels on the different time frames are different. So, for example, when you're looking for a potential take profit level,
yes,
and you go and you look at the liquidity levels, and you're thinking, is this going to go up more or go down more? And you go down to a 3-minute, the liquidity levels are very different to a 5-minute or a 1-minute.
Yes, they are. So what it's doing is the liquidity level. So all the logic is based on the higher time frame candle. So you can see here, if we get a setup occur, so right now we've got a short setup occurring. You can see this is a potential trade. That setup, we've got a sweep, we've got CISD. Once this is confirmed, then what it does is it's going to take, so you can see we've got 4 candles. It'll take the lows of the previous candles, and those become the liquidity areas on that setup. So it'll change depending on what time frame you're on. So that's why if you enter on this setup, the 15 and the 4 hour, then you want to set your targets based on those as well. Because it'll project. It hasn't projected. What will happen now is when this candle closes, then it will automatically mark out these liquidity areas. It'll mark out these 2 points here.
Got it. Great.
See, so it's just confirming that if this candle does in fact displace, the high probability it's going to take out the previous candle lows, because price is always taking out the lows. So that's why it'll be different. If we go into the 5-minute, you'll see if I go into the 5-minute, look, the liquidity will be much lower. It'll be over. It'll be here. The previous 2 boxes will be here and here.
So, got it. Great.
Cool. Great question. Thank you so much. Really.
Thank you.
Anyone else out there with some questions, comments, observations?
Hello, Seth.
Yes. Hi, Peter. How you doing?
Hello. Hi, I'm good. Good. This is my first live session, so that's very exciting for me.
Oh, welcome. Fantastic.
Yeah, thank you. I just checked on the break chart at 5 minutes, and I was
Yes.
kind of like wondering, is there any arguments why that wouldn't be a great setup?
Let's
It's
have a look.
it's even in like a fair value gap about way back in 25th of March.
Yeah,
And it's
this
just
looks
like
this looks like a good setup.
yeah.
Very nice. So
So
your entry would have been here. You would have entered actually on that break.
yeah, I just entered now like a few
Oh,
minutes ago. So
fantastic. Yeah, great.
so-
Yeah, it looks like a good setup. Let's go into a higher time. I mean, you can see it's very extended. It's hitting a wait, let's go into daily.
yeah, if you
Oh,
go
that
back there, there's a huge
oh wow.
fair value
That
gap there.
looks perfect. Look at that. Perfect.
Yeah.
Very nice. Yeah, that looks like a very good setup. Very nice, man. Well done.
All right, cool. So yeah, I'm always looking for where can I go wrong? But this setup is just like, yeah, as you say, you make it so much easier with this kind of like indicator. Just like
Yeah, it made it
I
so
have the basic, I have the basic understanding from your teachings, and I can know what this indicator is doing. So it's yeah, very nice. Thank you.
awesome. Thank you for that. Appreciate that.
Right, that's it.
Cheers. All right, guys. Anyone else out there? Are we good for today? Are we good? Fantastic, guys. Well, practice, practice, practice. Any questions? Anything you need to know, let me know. Any setups you see with this indicator, it makes it super easy to find setups. So we can all share setups that we see and help each other get into some good trades. I'll also drop some if I see some, but I think you'll be able to find more setups than before and have fun practicing it. And I can't wait to hear your feedback. And we'll come with more training on Wednesday. So we'll take it further from there. But
Thank you
keep
so
well.
much, Seth. That's brilliant, brilliant
Thank you.
indicator.
Pleasure, guys. Thank you. Appreciate the
Seth.
feedback.
Enjoy the rest of the day.
Yeah, have a fantastic day as well. See you guys soon. Cheers for now.
Yes, bye bye, everyone.
Bye.